What if the price sharply rises or falls? Can you catch her up precisely? Can you predict the price reversal with high accuracy? The answer is yes, you can. There are specific price magnet zones on the chart. Market algorithm always strive to fulfill. Let's dive deep into how we can profit from imbalance. What's up, money makers? My name is Alex. This is the second episode of Smart Money Trading course. I'll show you the real chart examples of how the imbalance works and provide effective entry setups you could backtest yourself right after this video. The imbalance is a formation of three candles. The gap between the first and the third candle shapes the imbalance. The size of the imbalance will depend on the opening and closing of the first and the third candles. This area shows us there was an imbalance between sellers and buyers. There were no sellers in the bullish imbalance or no buyers in the bearish imbalance. It happens because price goes so quickly, there is no liquidity for buyers or sellers. But as you remember from the previous video, the market algorithms work in a way when they always strive to balance the price effectively. So the buyers and the sellers have the same opportunity to buy or to sell asset in any price range. Now a few words about big players. From the first episode you learned that the big players controls the price movement. Big players are large financial institutions with complex trading strategies. They are interested only in buying or selling in only specific price ranges. Suppose an imbalance has been created during a sharp price movement in their zone of interest. In that case, they will pressure the price to bring it back into the imbalance zone to load their short or long positions fully. At first glance, it may look irrational, so you will object. They can open orders even at a better price. But no, it's not how it works. Reps of smart capital have obligations to other financial institutions, and they need to take positions only at the certain price levels to keep operations going with other companies. This is why the price will return to fill out the imbalanced area. In the first episode we went through the Bitcoin daily chart, where you saw how effective some significant bearish imbalances played out. Let's focus on this area and review it in lower time frame. As a result of this price drop, a few imbalances was created, and the nearest one was right here. The price reversed from it, and as a result we have a range here. Here you can see the range high and the range low. By the way, I will publish a separate video on how to trade ranges soon. The link will be in the description. Make sure to watch it, because 80% of the time the market state is a range. So let's get back to the chart. Here we see a retracement to the range low and the deviation out of range borders. After testing the lower edge, I expect the price to go into the range high. A bullish imbalance was created after this price reversal, and we see the price reversed again here. In the future, we see how the imbalances here, here and here play out. As a result, the price came to the range high and made a deviation. Here we see a sharp price drop with the new bearish imbalances created. We see the price reaction from the first. The second will also be filled in the future. You may ask, will that work only on specific time frames? Everything I just said will work on any time frame, from monthly to 1 minute, because the market is fractal. An imbalance will appear on any time frame, despite you being intraday trader, scalper or swing trader. Usually inside the daily imbalance you will find 4-hour, hourly, 15-minute imbalance and so on. As a result, moving towards a lower time frame will allow you to define the price reversal zone more precisely and open accurate position. There is a good question. Can you just set your order in the area of imbalance and wait until it will be fulfilled? Sometimes it might work if the imbalance is in your point of interest and your analysis based on the higher time frame. But you should keep in mind that not every imbalance will be fulfilled. So there is no reaction from this bearish imbalance because we had a local uptrend here. It makes sense to open a long position here. Also, you can pass on this bullish bullish imbalances because there was a test of the range high, after which we expected a price drop, and that is exactly what happened next. Always look at the context where the imbalance were created. Also watch my videos about order block, mitigation block, breaker block and candle wick pattern. An imbalance combined with these tools drastically increase your trade's accuracy. Subscribe to my channel and turn on notifications so you never miss them. So let's jump to entry setups, which are very common and easy to find, so you can practice it yourself just right after watching this video. The first setup consists of 4 elements. The first, we are looking for a swing high. The second, we wait for a liquidity grab. The third, the price reversed in the opposite direction. The price creates an imbalance. The second setup consists of the following. The first, we see double bottom or double top. The second, the price grabs the liquidity twicely. And the third, the price creates an imbalance. There are more effective setups I teach in my trading course, but these two are enough for a beginner to start. So, how to utilize that? The first example will be on the ALGO chart, 1 hour time frame. We took the previous significant high here after a sharp price drop where an imbalance was created. We're entering the position from 50% of imbalance, stop loss is set above the high and take profit is set to the nearest significant low. The risk reward ratio is 1:5. The second example will be with the same altcoin. We see the price approaching the range high, then a sharp reversal where imbalance was created. We enter from 50% of imbalance, stop loss set above the high, take profit set to the range low. The risk reward ratio is 1:5. The third example will be on the Litecoin chart. We set 1 hour time frame. In the zone of support there is a double bottom formation where the imbalance was created. The mitigation block acts here as the zone of support. I often use imbalance with other tools such as order block, breaker block, mitigation block and the candle wick pattern. This significantly increased the accuracy of my trades. I will publish these episodes very soon, or they may be already published. The links will be in the description. And don't forget to subscribe to my channel and turn on notifications so you never miss new videos. Entry is 50% of the imbalance, stop loss set behind the low. In this trade I split take profit into 2 takes. 50% will be taken at the nearest equal highs because this is a significant liquidity pool. The risk reward ratio is 1:3. The remaining 50% will be taken at this high. Here I have a 1:5 risk reward ratio. The fourth example, we set 1 hour time frame. Here we have stop loss rate from the previous highs and rapid engulfment where imbalance was created. Let's consider additional factors. The reversal happened at the order block in the premium zone. The classical shape of this order block you can find on higher time frame. Entry is the 50% level of the imbalance. I set stop loss above the high. The target is the previous low. The risk and reward ratio is almost 1:5. If you are a beginner, finding imbalances on the chart might be challenging, so I recommend you using indicators to train your eye. You can add them on TradingView. It will automatically light up imbalances on the chart. You will find indicators I use on my Telegram channel. I post a lot of helpful trading life hacks that are not available on YouTube. I publish daily cryptocurrency market reviews and coin analytics for free, and much more. The link will be in the description. Let's talk about entries, stop losses and take profits while you trade in imbalances. Usually price fulfills the imbalance at 50 or 100% level. These are essential values where you place your limit order to open a position. But sometimes the price only slightly touches the imbalance and then it reverses. You can place your limit order at the beginning of the imbalance zone, but the risk and reward ratio worsens in this case. Each trading situation is unique and you have to consider all additional factors you have on the chart. Also, I use a Fibonacci retracement tool to easily find 50% level of the imbalance zone. So, how to set stop losses? If you took a risk just to trade an imbalance without any additional confirmation, just set your stop loss about the wick of the first or the second candle. Also, you can set it about the nearest high or about the nearest low. If you rely on additional Additional confirmations such as order block, breaker block, mitigation block, candle wick pattern, stop loss is usually set behind them or about them. Take profit is usually set at the nearest liquidity pools, significant highs or lows, and important imbalances. Just make sure your risk to reward ratio is acceptable for you and at least 1 to 3. Observing price imbalances can help predict accurate market movements. It acts as a magnet and combined with liquidity pools should become the first tool you start your analysis with. When you apply imbalances in your analysis properly, your profit may increase drastically. All you need is to master it. If you enjoyed this video, subscribe to my channel, drop a like. Good luck to everyone and trade wisely.